Hi, everybody, and welcome to the Middle Class Investor. This is Seth Martin. It's Saturday, May 5th, Cinco de Mayo. So those of you that are celebrating Cinco de Mayo, happy Cinco de Mayo Day. Well, the market last week was a lot like the previous week. We'll zoom in here and just take a look at it. But you can see here that this looks a lot like this, and so we had, except the range was a little greater. You know, the range here was from here to here, and then the range this past week was from here to here. So you started off kind of bearish early in the week, opened here, ran way down, and then spent Thursday and Friday running back up. And you can kind of see here that this could be okay. So let me just back up. Last time we talked about big down, these two big downs. And these, if you look at closely, these are 5-wave moves. These are both 5-wave moves, which portends a 1, 2, and like a 1, 2. Okay, so that would make this I'm sorry, I did that wrong. I can't believe I did that. I don't know what I was thinking. Let me back up. The 1 goes at the obviously the bottom of the chart. So 1, 2, and then 1, and then this could be 2. Okay. Which it's not looking like it is given last week, so we'll put a question mark there. Or we've still got another up for a 2, something like this. And we do have this gap back here that we've identified on the chart. This gap here, so this next wave up could coincide with this gap. And if you look here, this took 1, 2, 3, 4 weeks, and so far this has taken 1, 2, 3, 4 weeks. So maybe this takes a 5th week. This is a more complicated. If you zoom in on this looks like a WXY if it's gonna pan out. Now there's alternatives here. I mean, this whole thing could be a triangle. I think that's worth looking at. For some reason, it won't zoom out. Let me see if I can. No, that's not working. Okay, there we go. Let's go to a daily chart and see if we can see what I'm talking about here. Clearly, you can see an ABC move here, and then here, this looked like maybe an A, B, C, and then this was like maybe an A, B, C. So this move up here was a little too big to be, it wasn't too big, but then you came and followed and made a lower close. I mean, this could have been a flat, but it's really looking more like this is going to have to come up into this yellow area to complete this particular pattern, at least. Now, if you look closely here, you can see, and this is the problem. This is this is why you got to pick places on the chart where you say, okay, well, I'm going to be wrong if it does this or that. So you got a triangle here where this could be A down. If I can draw an A, it's hard with this mouse. This is like B, C, D, and E right here. And of course, after this, you get 1, 2, 3, 4, 5 to new highs. So that's a possibility. And we're really not going to know that unless we clear this zone right here. So this is a possibility. If we clear this zone right in here, I would say that if we take out this low right here, then this triangle is off, and we're in some sort of 1, 2, 1, 2, and now we're starting 3. So this area is key right here. So what we want to see, if the market breaks this area right here, let's put a box there. If the market breaks this area right here and starts trading below this, then this is not a fourth wave. This is just a 1-2-1-2, and we're going lower. So get out of the way. If the market next week pulls up, pulls back, and then rallies, let's say over the next 2 or 3 days, maybe even the next 2 weeks, starts to rally up in this area, then we're probably going to new highs. The problem is, it has to go pretty high here before you can say, that's about where you're wrong here. And like I said before, we do have a gap here, and we've got a gap here on the chart. So it does make a lot of sense that this is all just a fourth wave, and that we're going to make a new fifth wave high. Deneric kind of shows it in the big. Did that again in the big picture. Let me zoom out of that. Sorry about that. I keep doing that. I brought up a Deneric chart. So you can kind of see here, here's the 2016 low, which resulted in this primary degree wave 4. And then you can kind of see this 1, 2, 3, and then where this is a 4, and then a 5 would take us up higher. So he's calling it the top alternate count. And the way he's got the current thing drawn here is just like we talked about, a 1, a 2, another 1, and either a 2 and a third one. This could be, this is certainly possible, y'all. This is very uncommon actually to see a 1, 2, 1, 2, 1, 2. But the reason it's possible is because there's still a lot of sentiment, positive sentiment for this bull market, for what people think is a bull market. And so that, it's not going down substantially, and then convincingly, let's say, not substantially, convincingly. And so there's people who are still bullish, and so you get in this 1, 2, 1, 2, 1, 2 thing. The bad news is once it breaks this low right here, just kind of like we drew a second ago, yesterday, which was Thursday's low. Once it breaks Thursday's low, it should pick up really fast to the downside, and this is where you got to really be careful when you're investing, is because this looks like a triangle, but this area right here, this line is very, very key. So if this zone right here gets broken, if the S&P 500 closes below 2580, or really even trades down here, but I would say a close would be more convincing. If the S&P 500 closes below 2580, man, get the heck out of the way, because this thing is really going to start picking up steam to the downside. Because then what that means is this is a 1, 2, 1, 2, 1, 2. So this box, if this is a double zigzag, this box is where it is right now. If it's a 1, 2, 1, 2, 1, 2, 3 degrees of trend, then you've got another box right here that's just just above this high right here. So let's look at that carefully. So again, if this is gosh, I keep hitting buttons that I'm not supposed to hit. Now I don't know what I hit, so I'm not sure what to do. Okay. Somehow I moved that. I didn't want to move that. Okay. So let's zoom in again. And let's look at it like this. So if this is a 1, okay, and this is a 2, let's call this, maybe primary degree. And then this is minor degree, 1, 2, and then let's say this is, or maybe this is not primary degree, let's say cycle degree 1 or something, some high degree level, the next degree down, and the next degree down. And this is another 1 down to here, and you got a flat. So let's say this correction is a flat A, B, where B is lower than 1. That means C is, we should know, if it breaks this, then we know this is not a 1. This is not a 1, 2, okay? Or 2 here. In other words, this is not a 1 down and then a 2 up if it breaks this line right here. This is why this is so important to study this model, is to know where you're wrong. So if we break this line, then this scenario is off the table, okay? If this goes up, let's say this goes up to here, okay? But then a couple days later, it starts making its way higher up to here. Then this being a double zigzag is off the table. In other words, W, X, Y is off the table because Y would have been more down in this area. Okay, and now we're back to the triangle. So right now, it's just one of these things that's very, very hard to tell. Next week should eliminate at least one of these. If we go higher than this line right here, then we're going to eliminate the 3 degrees of trend down. So that'll be easy enough to do. The hardest one to eliminate is probably going to be this WXY scenario because, well, let's put it this way. If the market trades up in this area, then we'll know that WXY is wrong and we'll know that this triangle is right. Does that make sense? And that we're going to make a new high up into this area somewhere. But then that would be it. I mean, you can see that that is it. I mean, that has to be it if you look at this this chart, this long-term chart from Deneric. Clearly, there's not any more options here. If this is a 1, 2, 3, this would have to be 4 and 5. The only reason we weren't counting this 4 initially is because you had kind of like a 4 in here and then this kind of weird looking 5. But as far as symmetry, this actually looks better. So I would say from a symmetry standpoint, you know, wave 5 is yet to happen, but even these are difficult to deal with because sometimes 5 can truncate. In other words, 5 doesn't actually have to make a new high. It can make it just a slightly new high by 1 or 2 points, or it can actually fall short of a new high and then sell off. So it's gonna be really touch and go here for the next few weeks, but the market should reveal something here, I would say within the next 2 to 3 weeks, because if we break this high right here, it'll eliminate the 1, 2, 1, 2, 1, 2 scenario and either leave the triangle or the double zigzag in this second degree 2 up into this area. And I just, to be honest with you, I just don't have a feel for which one is more likely at this point. The fact that, you know, the MACD or the stochastic is kind of making higher highs as the market was making lower highs, and then we've got kind of higher lows. It kind of makes me think that there's going to be a fifth wave. Because that is definitely a type of divergence. But it's really hard to say until we start eliminating some of these other possibilities. All right, let's look at interest rates. Hopefully, I mean, I spent some extra time on there because I think it's important to try to avoid, you know, the sell-off. But you know, for those of you that are still in the market and you're trying to hang on to the last little bit, I'm trying to zero in on, you know, what to expect. It looks like, you know, I thought initially that that yields would go up here and make a new high, and maybe they still will. They still could, but it's looking like this wants to pull back. And of course, we have this spot on here where it would pull back to, and I still think that's a likely area. So if you're still in the bond market, which hopefully you're not, you you might look for a pullback between yields between let's call it 2.2 and 2.5. So if yields pull back into this 2.2 2.5 area, then you might want to exit your bond funds. Let's look at the 13-week treasury. 13-week treasury, we're still trading. Well, we've dropped below the line a little bit. So we could actually see the Fed in its next meeting not raise rates. But I think the 10-year is more critical, so I think that's the one we should be looking at. You can see from the breakout point, when we first started talking about rates breaking out way back here, see how they traded in this zone for a real long time, and then boom, they broke out, kind of consolidated, and then took off. Consolidated and took off again. So, once we broke out of this zone right here, I think it was pretty easy to know that the rate cycle looked like it had bottomed and started to move back up. I'm not going to look at the other countries. They look a lot like the U.S. I don't think there's anything worthwhile. One thing that kind of doesn't fall in line with the new fifth wave high, I'm going to show you real quick, is the Dow. Okay, so here's the Dow. And notice that it really doesn't, it's more of a sideways to down kind of triangle. I mean, it's really not, it's not a typical kind of fourth wave triangle. It almost looks more like a descending triangle, which sometimes will resolve itself to the upside. But a lot of times what will happen on these type of triangles, not a lot of times, sometimes, is you'll get a breakout. And then everybody will start pouring into this, and then you'll get maybe a candle that looks like this with a long tail like this, and then all of a sudden it starts going the other way. Okay, so that happens sometimes. So we can look for that on the Dow. But my whole thing is, the reason I didn't think it was a triangle is because it's got this low here, and then a very similar low here. So this, if anything, it's more of an A, B, C, and then this is somehow 1 or 1, 2, 1, 2, and now we're in a 3. And so that that could be a fifth wave to a higher prices, something like that or something. But it's just unusual, I think, for the Dow and the S&P to look that different at this stage of the game. I mean, there's various times where they look different, but it's usually in the middle of some move like this and doesn't really mean anything. I think at the turns, it maybe means more. The transportation average is down pretty significantly too, so we've kind of got the Dow theory signal going here. And not every bear market had a Dow theory. I mean, not every Dow theory results in a bear market, but every big bear market, and especially the biggest ones, had Dow theory signals. So I think that's important to keep in mind. Let's see. Let's switch over to charts and look at a couple of. Let's look at. Let's see what we want to look at. Let's look at the euro. The euro is clearly selling off, and like an idiot, I got out of here because I thought maybe it might rally a little bit and then sell off again. And so I'm looking to try to get back in the euro. I think the euro is going to keep going down until this area, but I'm looking for some sort of rally, maybe into this 1.2 area, and then try to jump back in and ride it all the way down here. So I think that's a good trade right then. And then the really good trade is going to be once it makes it down into this area. So hopefully we get something like this, and then I can get back in, and then we'll sharply start moving down like so. And then once it does this, we might kind of sit on our hands a little bit and wait for an ABC pullback, somewhere in this area below these lows, somewhere right in here, and look for it to start turning and then re-enter, and then the next move down should be substantially lower than this. So here's some good trading going on the euro here coming up. I mean, the next move after, let's say we come down here and we rally back up to here to 1.2 or so, the next move down could be all the way down here to this 1.06 area. So I think there's some good opportunity coming in the euro. Oil, oil is looking strong here for some reason. I'm not expecting it really to be strong. But I would say the next, there's really not a support swing or anything, but there is this 1.168 area here around 79. And we could very well see this rally up into the 62% area. Silver. To me, silver looks like it's coiling up, or maybe has and is starting to break out now. But I would say if you're looking at buying silver or trading SLV or something like that, if we get a close next week above this high of the previous week, then I think you could see silver, make its way all the way up here somewhere. So, or this could just be a really big, B wave type of situation where you got, ABC, AB, ABC, 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 something like that. I think there's a lot of opportunity in silver. I think silver's going to outperform gold. Gold's, looking like it wants to grind higher into this resistance area. But it may chop sideways a little further. It may do that before it actually rallies up into that area. We'll see. I don't really have a good feel for silver or gold in these two areas. I'm still looking at them. I hold a lot of silver. I bought a bunch of silver, way back when it was. I mean, it's really not that much. Wasn't that much lower than it is right now. Right now, it's 16.5, and I think I bought it kind of down in this. Maybe it was down in here. It was like $15 when I bought it. So it actually went lower when I bought it. It rallied up and then went lower than where I bought it. But then shortly thereafter, it rallied and kind of never looked back. So I felt like I get a good price here. Bought in 2015. I think I bought like 1,000 ounces or something. So that's kind of what you're trying to do, is you're trying to just find a good place to buy. I mean, whether I bought here or here, it really doesn't make much difference. I mean, you still have to pay commission on it, so your cost basis is not $15. It's, 16.5 or something like that. So, but the whole reason for owning those is in case something really bad happens with the currency and you actually need to buy stuff, buying stuff with money that's inflating very rapidly is extremely difficult. I mean, merchants, hopefully we'll never see that, but if you go online and watch some YouTube videos, you can kind of get a glimpse of that. The British pound, US dollar is starting to pull back. We were hoping for a pullback, I don't know, somewhere in here, and didn't get it. But it looks like now we're getting a significant pullback in the British pound US dollar, and I haven't done the Fibonacci on it, but if you take this from low to high here and find out where your 61% area is, it's probably right below this area, somewhere right around in here. Sometimes what you want to do is you want to look for the 4 of the 3, whatever that is. This is pretty choppy in here, so it's really hard to tell, but it looks like to me it's right in this area. So I would expect, British pound to pull back, rally a little bit, and then pull back again, maybe into this area, maybe slightly lower into this area right here, and then resume its rally. If the US dollar continues to rally, which it should, and the euro substantially goes down, you might see the euro come down here, rally a little higher, and then sell off and actually make a lower low. So, you don't want to be married to the British pound, kind of like maybe the Canadian dollar, the U.S. dollar, Canadian dollar. This, I think, is more of a longer term trade right here. If you're interested in long-term trade in the forex market. But if you notice here, we'll draw some lines. This looks like kind of an A. This looks kind of like a B, and this kind of looks like a C. And then you get this launch off the bottom. You get a pullback, into this area, and then another launch, and then another pullback. So interestingly enough, down to this trend line, this falling trend line, and then it lifted off. So, the British pound, the Canadian dollar, I probably wouldn't even be too worried about it until you got into this area, and then you might run up into this area, sell off a little bit, and then boom, run up into the highs above this high right here. So to me, that's one of the better. Short euro, long US dollar, Canadian dollar, I think are the two best trades in the forex market. Those are the ones I would focus on if you're interested in forex. Again, oil looks like it could go higher here. I don't know that I would really look at trying to short oil or even oil stocks until you got here into the around 80. And then you might see oil get a little soft here. Maybe it pulls back first. It could pull back into here and then rally, again up into here. But it just looks like to me it wants to go into this 80 area. So what else do we need to look at? That's really about it. Again, the S&P 500, who knows, but we should know soon. Right now there's 3 different scenarios, and this pattern that we've been looking at, that we're talking about, is such a huge pattern that the degrees of trend here at the end are just very hard to figure out. And when you here, let me take all the studies off. Take the let's see, hide studies. Where's volume? Hide volume. Okay, and then just let's look at all data. Give it a second to pull up here and put the log on. So when you look at this, you can, when you zoom far enough out, back out, you can see this looks like a 1, this looks like a 2, this looks like this could all be 3, right, up into here. And then you see this 5 that took, this 4 that took like 15 years. But then this last little move, it just looks different. It's harder to see the rising and then the falling in this last stretch because it almost looks like it's just straight. This almost looks like a straight line. So you could see how this could be 1, A, B, C, 2, 3, 4, 5, right up to here, right? It's easy to see that could be 5, especially since it broke the trend line. See how it broke this trend line up and then fell back down through. So anyway, that's about it for the week, everybody. I hear the dogs barking. Somebody probably is here, so I'm going to go ahead and cut out. Thanks for coming in, and we'll see you next week. Take care, everybody. Bye-bye.